My friend Jada called me on a Tuesday night, and I could hear in the first 3 words that something was wrong. Alora, did you know about this? Not a question, an accusation almost, like I'd personally kept a secret from her. She'd just finished paying off her house 2 months earlier. 11 years of extra principal payments, skipped vacations, a refinance she agonized over for a week. The mortgage was gone. She'd texted me a picture of the paid in full letter from her lender like it was a birth announcement. And then somebody in her book club mentioned, completely offhand, that paid-off homes are actually a target for a specific kind of fraud. That once the bank stops watching your title, nobody is watching it. That a stranger with a printer and the right form can, in some documented cases, file paperwork at the county that makes it look like they own your house, or that they have a loan against it, without you signing anything, without you knowing anything happened until a letter shows up that makes no sense. Jada spent that whole call spiraling, and I don't blame her. I did the same thing 4 years ago when I first heard about this. I stayed up until almost 1 a.m, going down a rabbit hole of forum posts and local news segments, half of them contradicting each other. One of them trying to sell me a monitoring subscription before I'd even finished reading the headline. By the end of it, I had more anxiety and less of an actual plan than when I started, which is exactly backwards from what a video on this topic should leave you with. I want to save you that spiral, because most of what's floating around about this topic online is either wildly exaggerated, dressed up to sell you something, or missing the one piece that actually matters. What to do about it. In order, starting today. So here's what we're doing today. I'm going to walk you through what home title theft actually is, why it specifically shows up in the conversation right after you pay off your mortgage, and then 7 concrete, mostly free things you can do this month that meaningfully close the door on it. No fear-mongering, no $40 a month monitoring subscription pitch at the end. Just the actual plan I put in place for my own house, in the order I'd do it if I were starting from zero today. I'm Alora, and if you're new here, this is the Finance Mom HQ, where we talk about the money stuff nobody explained to us before we became the ones responsible for it. Let's start with what this actually is, because someone stole my house sounds like science fiction until you understand the mechanism. And once you understand the mechanism, it stops being scary and starts being manageable. Your home's ownership is tracked through a document called a deed, and that deed is recorded at your county's Recorder of Deeds, or Register of Deeds, or Land Records Office, depending on where you live. Whoever's name is on the most recently recorded deed is treated, on paper, as the owner. Title theft, sometimes called deed fraud or house stealing, happens when a criminal forges a deed, sometimes a quitclaim deed, which is a real legal document that simply transfers whatever interest someone has in a property, with no guarantees attached, and files it with your county as if you signed it. Notary stamps get forged too. Some counties still accept filings with shockingly little verification because recording offices were built to be efficient, not suspicious. Once that fraudulent deed is on record, the county system shows a new owner. That new owner, the criminal, can then do one of 2 things. They can take out a home equity loan against your house using their fake ownership as proof, pocket the cash, and disappear, leaving you legally tangled in a loan you never took out on your own home. Or, in more aggressive versions, they list your house for sale to an unsuspecting buyer. And by the time anyone catches it, the buyer, the title company, and you are all fighting over who has legal claim to your own front door. Neither version requires the criminal to ever set foot inside your house. That's the detail that made this click for me the way it probably will for you. This isn't a home invasion. It's a paperwork invasion. The entire crime can happen while you're at work, while you're asleep, while you're on vacation. And the first physical sign of it usually isn't anything happening at your address at all. It's a letter, a phone call from a collections department you've never heard of, a notice about a sale you never agreed to. The house itself sits there completely unchanged, while on paper, somewhere in a county database, its ownership quietly says something untrue. I want to be clear about the actual odds here, because I don't want to leave you more anxious than when you started this video. This is a real, documented type of fraud. The FBI's Internet Crime Complaint Center tracks it under real estate and rental fraud categories, and several county recorder offices, including large ones like Cook County in Illinois and Los Angeles County, have built free public alert systems specifically because they got enough reports to justify it. That tells you it's real. It does not tell you it's common enough to lose sleep over. It tells you it's common enough to spend 20 minutes protecting yourself against, which is a very different thing. Here's the part that actually explains why this conversation always seems to surface right after someone pays off their mortgage. And it's not superstition. While you have a mortgage, your lender has a financial stake in your title staying clean, because your house is their collateral. Many mortgage servicers monitor title activity on the properties they're financing, some through the title insurance they required you to carry as a condition of the loan. If a servicer's monitoring flags a new lien or a change on your title while you still owe them money, they notice, because a competing claim against their collateral is their problem too, not just yours. The second that loan is paid off, that layer of institutional watchfulness leaves with it. There's no servicer left with a financial reason to check on your title, no annual escrow review, no automated system pinging anyone when your name comes up in a county filing. Nobody's job depends on your title anymore except yours. This is also, unfortunately, exactly the moment when a scammer scanning public payoff records or recently satisfied mortgage filings, which are themselves public record in most counties, can identify your address as a house with no institutional eyes on it and real equity sitting behind the front door. You didn't lose protection by paying off your house. You lost a side effect of debt that happened to also function as a security system, and it's worth explicitly replacing it, on purpose, rather than assuming it's still there. Okay, here's the plan. 7 things, most of them free, in the order I'd actually do them. Picture this. You're standing in your kitchen, phone buzzing, and it's not a scam text. It's an email from your own county government saying, "A new document was just recorded against your property." You read it. You recognize it immediately. It's the routine easement update your neighbor mentioned last month, and you close the email in 4 seconds. That's what this looks like 99% of the time. And that 100th time is exactly the phone call that stops a fraudulent deed before anyone's taken a loan out against it. A lot of people assume this kind of monitoring requires paying a company. It doesn't in most places. Dozens of counties across the country, and it's genuinely worth checking whether yours is one of them, offer a free property fraud alert or recorded document notification service directly through the recorder's office website. You put in your name and your parcel number, and anytime a document gets recorded against that property, you get an email or text, same day or next day, for free, for as long as you live there. The misconception I want to bust here is that you need a paid service to get real protection. The free recorder alert is, in a lot of counties, the exact same underlying data the $20 a month title monitoring companies are reselling to you, with a nicer interface. I found mine for my own house in about 8 minutes of searching My County Recorder Fraud Alert, and it cost me nothing. Search your county name plus Recorder Fraud Alert or Property Fraud Alert, and if it exists, sign up before you finish watching this video. It takes less time than the ad break would have. Picture this. You go to your county recorder's website or walk into the office in person and request a copy of your current recorded deed. It takes 10 minutes and usually costs somewhere between $2 and $5 for the copy. You sit down with your coffee and you actually read it. Your name, spelled correctly, the legal description of your property matching what you expect, no unfamiliar co-owner listed, no transfer you don't remember signing. Most of us have never actually looked at our own deed. We saw it once at closing, in a stack of 40 other documents we were signing as fast as our hand would move, and we've never looked again. I hadn't looked at mine in the 6 years since I bought my house until I started researching this topic, and pulling it cost me $3 and about 15 minutes at the recorder's counter. The habit isn't just pulling it once, it's making it an annual thing, the same week every year, maybe right around when you do your taxes, so it becomes a 5-minute ritual instead of a one-time panic response to a scary video you watched. Find your county recorder or Register of Deeds website, and if it's not already ordered, request a current copy of your deed. Read it start to finish once it arrives. This is the one piece of the puzzle I see left out of almost every version of this conversation, and it's the most important one, so picture this carefully. When you bought your house with a mortgage, your lender required you to buy a lender's title insurance policy. That policy protects the bank. It does not protect you, and depending on your state, it can even become void once the mortgage it was tied to is paid off, meaning the exact moment people start worrying about title theft is sometimes the exact moment their existing title coverage quietly expires. An owner's title policy is a separate policy, one that protects you, the actual human who lives there, And in most states, it's a one-time premium paid at closing that then covers you for as long as you or your heirs own the home. No annual renewal, no monthly fee. If a fraudulent deed does somehow get filed and it takes real legal work to untangle it, a quiet title action, an attorney, months of paperwork, this is the policy that pays for that fight instead of you paying for it out of pocket. Here's the actual dollar figure, because this is exactly the kind of thing that sounds vague until someone gives you a number. When I called my own title company to ask about this for my house, an owner's policy for a home in my price range quoted at around $1,100, one time, no recurring cost, covering me for as long as I own this house. Compare that to a monitoring subscription running $20 a month, which is $240 a year, and in 9 years you've spent more on a service that only tells you something happened versus one that actually pays to fix it. If you bought your home with a mortgage and never separately purchased an owner's policy, which is extremely common because nobody explains the difference at closing, call your title company or a local title agent and ask directly, "Can I purchase an owner's title insurance policy now after closing, and what would it cost?" The answer is usually yes. Call one title company just to ask the question and get a real number for your specific home. You don't have to buy anything on the call. If any of this is landing, and you want the rest of this list along with everything else we cover here, week after week, no fear tactics, no subscription pitch at the end, hit subscribe. I put these out because I got tired of the financial internet either ignoring moms entirely or trying to sell us something every time we asked a real question. Picture this. An ad for a title lock service shows up in your feed right after you searched this exact topic, promising to protect your home's title 24/7. You almost sign up out of pure anxiety, and there's no shame in that. I nearly did the same thing the first week I researched this. The honest version is more nuanced than the ad. Paid title monitoring services generally do two things. They check public records for changes and alert you, which, as we covered in Habit 1, your county may already do for free. And they offer some form of restoration assistance or insurance if fraud happens, which varies enormously by company and is worth reading the actual fine print on rather than the marketing page. Some are genuinely useful for people who don't want to research their own county's free options or want a guaranteed restoration service bundled in. None of them replace owner's title insurance, and several of the cheaper ones are explicitly marketed in a way that implies they do. The filter I use now. If a service is telling you what happened after the fact, that's monitoring, and you likely already have a free version available. If a service is telling you what they'll pay to fix if something goes wrong, that's insurance, and it's worth actually comparing the coverage amount and cost against an owner's title policy before assuming the monthly option is the safer one. If you're already paying for a title monitoring subscription, pull up the actual terms and check whether it includes real restoration coverage or just alerts. Then compare that coverage number against what an owner's title policy would cost for your home. Picture this. 3 weeks go by and your property tax bill doesn't arrive when it usually does, or a document shows up addressed to you referencing a loan you never applied for, or a notice mentions a name on your property you don't recognize. Most of us would set that aside to deal with later because life is loud and that envelope looks like junk mail at first glance. The habits that actually catch title fraud early are almost always mail-based because the paperwork the criminal generates, tax bills going to a different address, loan servicing notices, insurance cancellation letters, has to go somewhere, and it often still tries to reach you before anyone updates it. The failure mode isn't that the warning never arrives. It's that the warning arrives and gets set on the counter under a school permission slip for 3 weeks. If any piece of mail this month references your home, a loan, insurance, or taxes, and you don't immediately recognize what it's about, open it same day instead of setting it aside. That single habit, on its own, is the thing that catches most of these situations early enough to matter. Picture this. You've locked down your title, and while you're at it, you realize you've never actually frozen your credit with all 3 bureaus, which takes about 15 minutes total and is completely free by federal law. Title theft and identity theft aren't the same crime, but they draw from the same pool of stolen personal information, and a credit freeze closes a door that a title-focused plan alone doesn't touch. Specifically, new loans and credit lines opened in your name using channels other than the county recorder. I hadn't frozen mine until I did this research, genuinely, despite talking about money habits for a living, and it took less time than deciding what to make for dinner that night. Freeze your credit with Equifax, Experian, and TransUnion. It's free, it's reversible anytime you need to unfreeze it for something like a mortgage application, and it takes about 15 minutes for all 3 combined. Picture this, and I promise this is the last one. Nothing has gone wrong. Nothing is currently on fire, but you've saved the contact information for a local real estate attorney in the same phone folder where you keep your pediatrician and your plumber. If a fraudulent deed ever does show up on your title, the legal fix is called a quiet title action, a lawsuit that asks a court to formally confirm you're the real owner and void the fraudulent document. It's very fixable. It also goes faster and costs less when you're not simultaneously panic Googling real estate attorney near me at 11 at night, while also trying to figure out if this is even a real law firm. Ask one friend, or your regular attorney if you have one, for a single real estate attorney referral, and just save the name and number. You're not hiring anyone. You're removing one decision from the version of you who might need to make it fast someday. And while we're on the subject of removing decisions from a future, more stressed version of yourself, it's worth spending 5 minutes writing down the actual sequence you'd follow if you ever did get one of those confusing letters. Not memorizing it, just writing it somewhere you'd actually find it. Call the county recorder first to ask if anything's been filed against your parcel number. Call your title insurance company second if you have an owner's policy, since that's what starts the claims process. And call the attorney third if you don't have coverage, or the recorder confirms something's actually wrong. Most people's instinct in that moment is to panic call everyone at once, or, just as often, to assume the letter is a mistake and set it aside. Having the order written down ahead of time turns a scary hour into a boring checklist. And boring is exactly what you want a financial emergency to feel like. So that's the plan. Free recorder alerts, an annual deed check, understanding owner's title insurance and what it actually covers that a lender's policy doesn't. Being honest with yourself about what a monitoring subscription is and isn't paying for. Treating unexplained mail like a smoke detector instead of clutter. A credit freeze and one attorney's name saved before you need it. I called Jada back 2 days after that spiraling phone call, and by then she'd already signed up for her county's free alert and requested a copy of her deed. She told me she almost didn't bother, because by the time we hung up the first time, she'd half convinced herself it was easier to just not think about it, which is the most human response in the world, and also exactly how these things stay unprotected for years. But she did it anyway, between making dinner and helping her daughter with a book report, in the kind of scattered 25 minutes every mom recognizes. And that was the whole emergency, handled, for less than the cost of the coffee she was drinking while she did it. That's really the thing I want you to walk away with today. Not the specific statistics, not the acronyms, not even the exact order of the 7 habits, though I genuinely start with the free recorder alert if you only do one. It's that this entire category of fear responds extremely well to small, boring, slightly tedious administrative tasks, done once, mostly for free, and it responds terribly to anxiety alone. Anxiety doesn't file a deed request. Anxiety doesn't sign up for an alert. Only you, in an ordinary 25 minutes on an ordinary Tuesday, can do that. You didn't lose protection when you paid off your mortgage. You lost an accidental side effect of debt. This week, go build the protection back on purpose. And then go enjoy the fact that you don't owe anyone a mortgage payment anymore, because that part is genuinely worth celebrating. If this helped, tell me in the comments whether your county has a free recorder alert. I'd love to know how many of you find one. And hit subscribe if you want more of this, every week. I'm Alora. This is the Finance Mom HQ. Raising kids and retirement funds. Go take care of both.